What is a stock brokerage? Stock brokerage is a company that acts as a middleman to engage in stock market transactions on your behalf. This means that they connect buyers and sellers together to trade stocks. You don't really need to worry about transferring ownership of your shares to other people or a lot of the dirty work that it takes to invest. The brokerages handle those aspects for you, so you can just buy and sell stocks pretty easily. Some examples of stock brokerages that you might have heard of before are Fidelity, Robinhood, and Charles Schwab. It's also important to make the distinction between what a stock brokerage is and a stock broker, because you might see those terms used relatively interchangeably at times. A stock brokerage is the company making those stock transactions on your behalf, and a stock broker is a representative at one of these firms that will provide additional services if you'd like them. The broker might provide additional financial guidance and advice, and place trades for you if you want a physical person to help you instead of doing it online, among other services. How much you have to pay a brokerage depends on what type of experience you're looking for. There are technically two different types of brokerages to choose from. Full service brokerage has that more personal service. You can have an advisor that will give you advice and recommendations, and in exchange, these brokerages are more expensive to use because of all the additional perks. Some examples of prominent full service brokerages are Edward Jones and Morgan Stanley. By contrast, a discount brokerage doesn't provide much guidance unless you specifically ask and pay more for it. They'll just provide you with a variety of tools to make your own decisions and execute trades on your behalf. If you trade stocks on your own, online, then you'll often find that nowadays there are no commissions to buy any stocks or ETFs you want. And commissions on trades were one of the main ways that brokerages used to make money. So now you can pretty much trade stocks online for free, which is quite nice. Many discount brokers will provide additional services like a full service brokerage if you want it, so that's where the lines get skewed a bit. For example, here's the top 10 list of full service firms. You can see Fidelity's number 3 on this list. Now I use Fidelity myself, but I never actually interact with a broker. So when I think of Fidelity, I don't think of them for their full service experience, but yet JD Power ranks them pretty highly in that aspect. But the main point is, with brokerages like Fidelity or Charles Schwab, they have in-person offices around the US if you want to go there, but the experience will primarily be online for most people. While those brokerages have both online and in-person services, there are also brokerages like Robinhood and Webull that are purely online. They have no physical locations you can visit, so that's something to consider as well. And if all this sounds a little confusing and you're wondering what trading stocks actually looks like, then don't worry. I'll go over buying stocks on Fidelity toward the end of the video, which is the brokerage I use, so you can visually see how it works, and I promise it isn't all that complicated once you get the hang of it. For many of these brokerages, it's not just buying stocks though. You can see for Fidelity, you can buy stocks, mutual funds, ETFs, options, bonds, commodities. The list keeps going. There are a lot of different assets you can buy at these firms, and we'll just touch on stocks in this video, but you can see all the possibilities. Now, spurred by Robinhood's popularity and innovative no-commission trading, back in 2018, 2019, the rest of the stock brokerages have had to compete with them and do the same. So trading stocks on most platforms is free at this point if you aren't using a full-service brokerage. But that doesn't mean that there are no fees to look out for anymore at all. For example, there are regulatory transaction fees from FINRA for $8 per $1 million in stock value when those stocks are being sold. This is a cost that Robinhood passes on to customers. And not that anyone particularly cares about $8 if they have $1 million, but it's still there. Just from this chart that Fidelity has comparing themselves to Charles Schwab and Vanguard, we can see just how many possible fees there are. At the end of the day, if you're investing large sums of money, these probably aren't a big deal. But if you're just starting out, it pays to see what fees a stock brokerage might be charging. Robinhood, which is a popular stock for beginners, has a $100 transfer fee. So if you want to move the stocks from Robinhood out to a different brokerage later on, that cost is something to think about. Some brokerages will cover that cost for you, but you'd have to check with them individually to see if they'd help you pay for that. Last thing for account fees, like I mentioned earlier, use a full service broker experience, you'll have to pay up for that. You can see that Edward Jones, a full service brokerage, can charge up to nearly 6% in commissions on your stock trades, with annual fees for guided solutions where a broker builds a portfolio for you. So if you're starting out, it would be wise to just focus on looking into discount brokerages where you trade on your own, unless you've already saved up a significant amount of money. As far as which investment accounts you can open at a brokerage, there are 6 options to choose from. The primary one most people will have is just an individual, regular, taxable brokerage account. The second one is any type of retirement account, like an IRA or a 401k at your job. These are specialized accounts specifically focused for long-term investing in most cases, and many of those accounts have specific rules about taking money out and better tax benefits. So those are something everyone should look into after opening an individual account. The third type of account is a joint account, which is just an account owned and run by multiple people. Pretty self-explanatory. There are also custodial accounts, which are accounts that parents can open in the name of their kid so they can get started investing before the age of 18. Then the fifth type of account is an educational account, also known as a 529. This is another one where you can open an account to save and invest to later pay for education-specific expenses. That would be things like tuition or books at a college. Lastly, there are disability accounts, which are known as a 529A, also called an ABLE account. These are specifically for people with disabilities and act as tax advantage accounts to be used on disability-related expenses. In addition to offering a bunch of different account options, many brokerages also provide educational platforms for beginners. Here we can see Fidelity, for example, offers a news page and a watch list service to create lists of stocks you're interested in, but they also have an educational section called Learn, which is dedicated to teaching beginners many of the concepts you'll need to understand to invest. There are plenty of options to work through here, including educational content for beginners just starting to invest, a lot of information you'll need to learn about the stock market, and more advanced trading strategies as well when you get to that level. Now, this type of offering will vary by brokerage, as many aspects do, but a lot of the brokerages will have some type of service like this to help you learn. As I mentioned multiple times now, I use Fidelity as my discount brokerage, and we'll go over what it visually looks like to buy a stock right now. Now, here's what you see on the home page of Fidelity when you log in. You can see all your accounts on the left. I blacked out the account numbers and some of the names for obvious reasons. Now, I have an individual brokerage account and a retirement account, which is the IRA. But in this summary screen, you can see what the markets have done that day and news at the bottom, among some other interesting widgets, as well as your total account balance. I have a large drop on the graph because I've been laid off from my job recently and not all my 401k was vested. But anyway, if you want to buy a stock, you'll look for the search bar on your brokerage like what Fidelity has in the top right here. Then you'll type either the company's name or their stock ticker. In this case, we'll just type in Microsoft, and we can see the ticker MSFT comes up, and that's Microsoft stock. They're ordinary, also known as common shares. So we'll want to click on that one. When we click on it, this is the screen that comes up, Microsoft stock. And as we scroll down, we can see that Fidelity provides us with a lot of information about the company, if you want to do some research on Microsoft right on the buy page. But assuming you've done some research and want to buy the stock, the main section we really need to worry about right now is this section here on the right. You can see the bid and how many shares it is, which is what someone wants to buy the stock for. And then there's the ask below it, which is the lowest price someone wants to sell the stock for. We have the daily and weekly ranges at the bottom, which tells us what price the stock has been trading at recently. And then in the top right of the box, we have the volume, which is how many shares of the stock has been traded on average. Now, the first one's over the day, and then below that, we have the 10 and 90-day averages. Bid and ask tell us what price we'll probably be able to buy or sell a stock for. So somewhere in the range of $366.27 as the buy, and $366.50 as the sell. And this is known as the bid-ask spread. The price on the left is a little higher at $369 because the markets are closed as I'm recording this video, so the prices are a little off, but that's fine. That price is the official price of Microsoft and would normally be in the $366 range as well, but like I said, the markets are closed at the moment. If we hit the buy or sell buttons on the left, then this trade window will pop up. Now, yours might look slightly different from mine if you're using Fidelity right now. And that's because I clicked on the expanded ticket window option at the bottom. So moving from top to bottom here on all the selectable options, you can see we're trading stocks. I'm on my IRA account, see the cash available, and we can see that we want to buy 1 share of Microsoft in the quantity. The order type will say how we want this order filled. We have market, which will automatically buy or sell the stock at the best price Fidelity can get, which can be fine on larger stocks, but on smaller stocks with lower amounts of shares being traded, the lower volumes, that can be dangerous. When there aren't many shares on the market, the bid-ask spread can get pretty large, and you can risk getting filled at a bad price. So that's something to consider. For a stock like Microsoft, going with a market order is fine, but the safer option is going with a limit order, which is where you'll tell Fidelity a specific price you want to buy or sell at, and if the stock isn't at that price, then the order won't go through until it is. There's also the option to put in a stop loss, which allows you to say that you want to automatically sell the stock if it falls down to a particular price to limit your losses. Now for now, we'll just do a limit order, so that's fine. Then we're saying the stock should be bought during the current trading day, and that's fine. So let's preview the order now. Now I don't have an extra $360 or so in my account currently, so just imagine this is Microsoft. I had to do it with another stock to get to this window. Anyway, this is what the final order screen looks like. It'll confirm all your selections, and then you'll place the order. You'll get a confirmation number when you do that. If the order goes through, then you'll see it end up in your stock positions page. This is the positions page on Fidelity, where all your stocks are shown. You can see in my IRA, I recently added 3 new stocks. That's why the rows are highlighted yellow. And I'm not going to show you what stocks those are because beginners shouldn't be buying those. But yeah, that's how buying a stock works. Ultimately, you're just giving Fidelity or any other brokerage orders in a trade window of some kind, and they handle the rest on your behalf on the back end. I hope this video cleared things up for you. I know stocks can be a bit of a complicated thing to understand. This video is part of a larger series on my YouTube channel on learning about and buying stocks. If you'd be interested in learning more about them, then that playlist will be linked in the YouTube cards and the description below. Thanks for watching.